Okay, so you've been really digging into this whole bond tent thing for retirement. And honestly, when I saw your research, I knew we had to unpack
Yeah.
this. It's one of those things that sounds like deceptively simple at first,
It really is.
but the more you think about it, the more intriguing it gets.
It illustrates a real shift in mindset, going from accumulating wealth to actually needing to access it
Totally.
safely and sustainably.
Yes. It's less about chasing those huge returns and more about, protecting what you've already built.
Right.
So for anyone who's maybe hearing about this for the first time, how would you even explain the whole bond tent concept? Why is it relevant as we get closer to retirement?
Yeah. So picture this. You're getting close to retirement, maybe 5, 10 years out. You spent years building this portfolio, probably heavier on stocks for growth,
Right.
right?
Yeah.
But now all of a sudden you're looking at this period where even a small dip in the market could really mess things up. Just when you need that money the most. That's where this whole bond tent thing comes in. It's about strategically increasing how much you have in bonds, which are usually way more stable than stocks as you get closer to retirement.
Hmm.
Then, just like the name suggests, you start to decrease how much you have in bonds as you go through retirement.
So you're creating a sort of shelter for your portfolio during those riskier years.
Exactly.
But why bonds in particular? Aren't they supposed to be kind of, well, boring compared to stocks?
They can be, yeah, that's true, but that's also what makes them so valuable here. Think of bonds as that reliable friend in your portfolio. They're
Uh-huh.
not going to go on those wild rides that stocks do, which can be exciting, sure, but also terrifying, depending on the day.
For sure.
And, okay, so bonds may not have the same potential for those sky-high returns like stocks, but they give you something really important as you transition into retirement, a more predictable income.
Yeah, that stability is huge, especially when you consider that a lot of people are using their portfolios for income for the very first time in retirement.
Exactly. It makes total sense. Instead of being on this roller coaster with the stock market while you're trying to withdraw money each month, bonds can kind of act as a buffer,
Right.
provide some stability and peace of mind.
Okay, so let's get down to brass tacks. The articles you shared had this example. A hypothetical person who's 55, their portfolio is 80% stocks and 20% bonds.
Right.
How do they even start building this bond tent over, say, the next 10 years?
So in that situation, they would gradually begin to shift how their assets are allocated, selling some of those stocks and using that money to buy more bonds. And this would ideally be done systematically over time, not just all at once.
Makes sense.
By the time they hit retirement age, 65, their portfolio might look more like 40% stocks and 60% bonds, essentially flipping the script to become more conservative as they actually retire.
They're essentially at the peak of their bond tent the moment they retire. That's a powerful visual.
Yeah.
But wouldn't being heavier in bonds mean potentially missing out on growth, especially doing what could be a long retirement?
That's the million-dollar question, isn't it?
It is.
And that's where the whole tent picture really comes into play.
Okay.
It's not about staying at that peak allocation forever, right? As you move through retirement, you'd slowly start shifting back towards having a bit more in stocks.
So the tent starts to fold down as we get further into retirement.
Yeah.
But why is that? I would think the further I get from working, the more I'd want to be safe.
It does seem counterintuitive, yeah. But think about it. Retirement isn't just a day, it's this whole chapter that could be decades long. And while those early years are about protecting what you have, you also have to consider the long game. That's where stocks come back in. Historically, stocks have done better than bonds over a really long time,
Right.
which can help you keep up with inflation as it eats away at your savings.
So it's a balancing act, isn't it? Protecting what you have while still letting it grow. The articles mentioned our example investor. They might end up around a 60-40 split by 75 stocks to bonds. Is that common or does it totally depend?
It's just an example, to be honest. The ideal split will depend on, well, your risk tolerance, how long you're expected to live, even your expenses in retirement. Someone with a longer lifespan or who's more comfortable with risk might have a steeper slope to that 10, so they'd shift back to stocks more aggressively.
So no one size fits all.
Yeah.
Got it. It seems like understanding the risks is just as important as the strategy itself. Speaking of, the articles mentioned interest rate risk with bond tents. What exactly is that and how does it play into all this?
Interest rate risk is really important for any bond investor, basically. When interest rates go up, what happens? The value of existing bonds usually falls.
Okay.
Imagine You buy a bond today, it's paying 3% interest. The next year, rates jump to 4%.
Right.
Your bond is stuck paying 3%, so it's not as appealing to other investors.
Right.
Sell it, you'd probably have to lower the price.
Makes sense. So if someone's super heavy in bonds as they retire and rates spike, their portfolio takes a hit at the worst time.
Exactly. And it's not just about losing money up front. It can hurt your income too. If you need those bonds to give you steady income in retirement and their value drops, well, you have to sell more bonds than you planned just to get the same amount of money.
Okay, that's a big deal. Timing is everything with bonds and these interest rates.
Absolutely. It's a balancing act, that's for sure. Of course, if rates fall after you've got your bond, you're in a good spot. And if you're buying new bonds when rates are higher, you get those better yields. So it's something to manage carefully, especially around that peak of the bond tent.
And then there's the elephant in the room with any investing. What about a huge market crash? Could a bond tent really handle that, or is that just wishful thinking? So if the market were to really tank, could a bond tent actually hold up? Or are we kidding ourselves?
Let's be real for a second. Any kind of serious downturn is going to impact a portfolio, even one that's mostly bonds. But that being said, a market crash is exactly when a bond tent can prove its worth.
Okay, now I'm really interested. Tell me more.
Remember how we talked about bonds being stable, that steady income they can provide?
Yeah.
So during a crash, when your stocks are plummeting, those bonds act like a safety net, right? They can give you that security to ride things out without making any rash decisions, like, selling off stocks at a loss because you're panicking.
So it's not about dodging the storm completely. It's more like having the right gear to handle it.
Nailed it. You're
Yeah.
getting it. It's about managing risk, not pretending it doesn't exist. And it acknowledges that what we need and how much risk we can stomach, that changes throughout retirement.
We've covered a ton today, but I keep thinking back to the examples from the articles. They focus on someone with like 10 years until retirement. What about someone further out, say 20, even 30 years? How does this whole bond tent thing work with a longer timeline?
Well, that's where you really get into customizing the strategy. With the longer runway, you have the luxury of time, right? Time for those investments to bounce back if the market dips, time to tweak your plan if you need to.
So someone further from retirement, would they have a less dramatic peak to their bond tent?
Yeah, exactly. They might start with way more in stocks and then gradually increase those bonds over a longer period. So it ends up being a longer, flatter tent if you're picturing it. And, they could even think about a multi-tiered approach, adjusting those bond levels at different points as they near retirement, which gets pretty advanced.
This has been seriously eye-opening. We started with a simple image, this bond tent, and now we're talking about all these different parts of planning for retirement. How much risk can you handle? How long will you live? What about interest rates? Market crashes? It feels like sailing without a map sometimes.
That's the truth, isn't it? There's no one perfect way to retire. But at least we can arm ourselves with some knowledge, right?
Right.
Understand what tools and strategies exist, and then make smart decisions based on our own personal situation.
Couldn't have said it better myself.
No.
So for everyone listening who might be feeling a little overwhelmed right now, what's the most important takeaway from all this bond tent talk?
I think the big takeaway is this. Planning for retirement isn't like setting a clock and forgetting about it. It takes work. It's an ongoing process of looking at your situation, making changes, and fine-tuning things. What works for your neighbor might not work for you, and what worked for you 10 years ago might need to change today.
So true. So as we wrap things up, is there a question our listeners could ask themselves, like today, to start applying this bond tent idea to their own retirement plans?
I like that. How about this? Imagine yourself 10 years from now, 5 years from now, even just 1 year from now. What does your ideal retirement actually look like? Once you have that picture in mind, you can start working backward, figuring out what strategies and tools, like maybe this bond tent, can help you get from where you are right now to where you want to be in the future.
Love it. A huge thank you to all of you for joining us on this deep dive into bond tents. Until next time, happy investing, everyone.